Hi everyone. In this video, we'll practice applying the rules of debits and credits and use dead coil as a tool to help us decide whether to debit or credit an account balance. We'll be referring to dead coil frequently, so you might want to have your copy available as we work through the exercise. We'll also be using a new practice aid that you haven't seen yet. I strongly recommend that you download and print this 2-page worksheet so you can follow along with the video and practice analyzing and recording business transactions in T accounts. Click on the worksheet link directly above this video to download and print the worksheet. Let's take a look at the worksheet to see how to use it. First of all, there are 3 identical sections. This top section here is identical to the middle section and to the bottom section. That means that you can use this worksheet to analyze 3 different business transactions. To analyze a business transaction, you need to first read and understand the transactions. In our first example here, Mary Gonzalez invested $10,000 cash to start a business. The goal of this analysis is to determine which accounts need to be debited and which need to be credited in order to record this business transaction. Here is the thought process that you should apply to help you make this determination. This thought process, by the way, is similar to the analysis we performed in the Chapter 2 exercise when we posted business transactions to a spreadsheet for Craven's consulting service. First, identify which accounts are involved. Remember, there will always be at least 2 accounts involved because we are following the double entry method of accounting. Next, you need to identify what category in the accounting equation that the account belongs. Note it says here, see note 1 below. If you page down on the worksheet, you will see a reminder of the 6 categories in the expanded accounting equation, and your choices are asset, liability, equity, income, expense, or draw. Next, we need to identify the normal balance of the account. Is it a normal debit or a normal credit balance? For instance, if the account is cash and we decided that cash is an asset, we can refer to dead coil to see that cash and all asset accounts have a normal debit balance. Then we need to decide whether the account balance will increase or decrease as a result of this business transaction. Once we know what the normal balance of the account is and whether the balance should be increased or decreased, we can apply the rule that like signs add and opposite signs subtract to make a decision of whether to debit or credit the account to accomplish the goal of increasing or decreasing the account balance. And finally, we need to enter the dollar amount of the transaction. Practice. Mary Gonzalez invested $10,000 cash to start the business. What 2 accounts are involved? Well, the business received $10,000 in cash, and before this business transaction, there was no capital recorded on the books. So the 2 accounts involved are cash and M. Gonzalez capital. Once you have identified which accounts are involved, then don't try to work across the columns horizontally. Instead, work only vertically. In other words, finish the cash column completely before you try to analyze the capital column. So let's go with the cash column. What category of account is cash? Cash is an asset account. What is the normal balance of the cash account? Well, referring to dead coil, it's easy to see that cash and all assets have a normal debit balance. So cash is an asset with a normal debit balance. Does the account balance increase or decrease? Well, before this transaction, the business didn't have any cash. Now they've got $10,000 cash, so the cash balance increased. Should we debit or credit the account to accomplish our goal of increasing the balance? Cash is an asset with a normal debit balance. We want to increase its balance, and like signs add. A debit will increase another debit balance. Therefore, we need to debit the cash account to increase its balance. And by how much? $10,000. We're finished with the cash column. Let's ignore the journal entry space right now. We'll get back to that in Chapter 4. Let's take a look at the capital column. What kind of an account is capital? Your choices are assets, liability, equity, income, expense, or draw. Capital is an equity account. We need to know what the normal balance of the capital account is. By referring to dead coil, we can see that the owner's equity account has a normal credit balance. So capital is an equity account with a normal credit balance. Does this balance increase or decrease as a result of the business transaction? Well, before this transaction, the company had no equity recorded on its books. Now it has $10,000 of equity. Therefore, the balance in the capital account increased. Should we debit or credit the account to accomplish our goal of increasing the balance? Capital is an equity account with a normal credit balance. We want to increase its balance. Like signs add. Credit plus credit. Therefore, we need to credit the capital account to increase its balance. By how much? $10,000. This worksheet is an analysis tool that will help you understand the thought process used to analyze business transactions. It is not part of the books and records of a company. Before long, you won't even need to use this worksheet to properly analyze and record a business transaction. So if this worksheet is not part of the books and records, then how do we record the business transaction into the company's books? There are several ways to record transactions. Chapter 3 tells us that the business transactions should be posted to T accounts. We'll discover other ways to record business transactions in future chapters. As you can see on page 2 of the worksheet, we have a separate T account for cash and another one for M. Gonzalez Capital. Remember, debits are always posted on the left and credits are always posted on the right. This analysis tells us that we need to debit cash $10,000 and credit capital $10,000. Let's post it to the T accounts. Debit cash $10,000 by posting a debit on the left and credit capital $10,000 by posting the credit on the right. Then stop and check your work. When you are finished recording each business transaction, check to see if debits equal credits. This is a $10,000 debit to cash and this is a $10,000 credit to capital, so our T accounts are in balance. Debits do equal credits. Let's do the other transaction. We paid $2,100 for this month's rent. What accounts are involved? Well, we spent some money, so cash is involved, and we are paying for the current month's rent expense, so rent expense is involved. Let's work down the cash column. What category of account is cash? Cash is an asset account. What is the normal balance of cash? I think you remember from the first transaction that cash and all asset accounts have a normal debit balance. Does the balance increase or decrease as a result of this transaction? Well, we spent the cash, so the balance decreases. Should we debit or credit the account? Like signs add and opposite signs subtract. Cash is an asset with a normal debit balance. We want to subtract from or decrease its balance. Opposite signs subtract, so we have to credit the account to decrease its balance. By how much? $2,100. Let's do the rent expense column next. What category of account is rent expense? Well, the word expense is a big clue. Of your choices, rent expense is an expense account. What is the normal balance of this account? Looking at dead coil, we can easily see that rent expense and all expenses have a normal debit balance. Does the balance increase or decrease as a result of this transaction? Before this business transaction, there was no rent expense recorded on the books. Now we have $2,100 of rent expense, so the balance in the account increases. Should we debit or credit the account? Like signs add. Rent expense has a normal debit balance. We want to add to or increase its balance. Therefore, we have to debit the account, debit plus debit, to increase the balance in the rent expense account. So this business transaction tells us that we need to debit rent expense for $2,100 and credit cash for $2,100. Let's post the transactions to the T accounts. Always remember that debits are posted on the left and credits are posted on the right. We need to debit rent expense $2,100, and here in the T account, I debited rent expense $2,100 by posting the amount on the left. We also need to credit cash $2,100, and here I credited cash $2,100 by posting the amount on the right. Well, that's all for this video. I'll see you next time.